our spirits and bolster our path to recovery, the month of July, the first month in Q3, was the highest grossing month for AMC in 12 years. And it was the second highest grossing box office month ever in our 103-year history. As you know, this performance in July was driven by the resounding success of titles such as Sound of Freedom, Mission Impossible: Dead Reckoning Part 1, Oppenheimer, and for all of you dressed in pink, Barbie, among other titles. In the United States, the July box office represented a 5.8% increase compared to the pre-pandemic July of 2019, and a 20% increase compared to last year's July. For AMC globally, these milestones translated into July of 2023 being the highest revenue month for our company in our entire 103-year history. The first week of August is continuing with an incredibly strong showing, with the domestic industry box office about double that of last year. This all speaks to what we at AMC have said time and time again. Studios are masterful at storytelling, and when they have great stories to tell, they are best showcased, in the words of Nicole Kidman, as dazzling images on our huge silver screens. Here at AMC, those stories are perfect and powerful, and audiences are flocking to our AMC theaters in the United States and our Odeon cinemas in Europe and our AMC cinemas in the Middle East as a result. Looking forward to the rest of 2023, we have a slew of exciting movies yet to be released this year. They're coming. And barring complications to the timing of film releases due to the uncertainties arising from the writers and actors strikes currently well underway, unfortunately, we have good reason to believe that the second half box office will continue to show real strength this year. Even so, we will not get to 2019 pre-pandemic levels for this full year, 2023, but there is a clear trajectory upwards. Our hope is that COVID-19 is but a bad ancient memory by 2024 or 2025, even though as much as some of you hate it when I say the words COVID, we are still dealing with the aftermath of that pandemic. Now, at this point, I'll pass the webcast over to our CFO, Sean Goodman, to provide more details on our financial results, after which I'll return to talk about some of our ongoing initiatives and AMC's plans for the future, as well as taking some of your questions. Sean?
Thanks, Adam. Thanks, everyone, for joining us this afternoon. So before I begin my comments on our second quarter financial performance, I would like to just take one moment to provide a little bit of context behind our earnings release and 10Q issuance this morning, rather than our customary after-the-market issuance. As you know, the Delaware Court is currently in the process of reviewing our proposed shareholder litigation settlement. A ruling by the court prior to the issuance of our 10Q could constitute a post-balance sheet event that might require an adjustment to our financial statements and thereby a possible delay in our regulatory filings and earnings release. So to avoid any such risk of a delay and the possibility of thereby missing our filing deadlines, we decided to release our results for the second quarter before the market opened this morning. Okay, so now on to our results for Q2, our strongest quarter post-pandemic and a clear sign of our ongoing recovery. 2023 has continued has continued to see box office recovery, $1.7 billion in Q1 and now $2.7 billion in Q2. For the first half of 2023, the box office is now up approximately 20% from the same period last year. And remember, the first half of 22 was up almost 4 times from the same period in 2021. With attendance growth of 12.2% and revenue growth of 15.6% compared to the second quarter of 2022, we grew our adjusted EBITDA by 71% to a post-pandemic record of $182.5 million. This illustrates the operating leverage that is inherent in our business model. For the quarter, we achieved positive earnings per share for the first time since Q2 of 2019. Now, granted, it's a small positive number, but for those of us who have been working tirelessly for AMC to recover from the depths of the pandemic, it is yet another milestone along our recovery. In the North American business, total revenue increased by 19.8% compared to Q2 of 2022. This was driven by an attendance increase of 15%, admissions revenue per patron increase of 2.2%, and food and beverage revenue per patron increase of 9.2% to a record all-time high of $8.22, surpassing the previous record that was set just last quarter, and an amount that is 47.3% above pre-pandemic Q2 2019. In the international business, on a constant currency basis, total revenue increased by approximately 1% compared to Q2 of 2022. This was driven by an attendance increase of 4.6%, admissions revenue per patron decrease of 1%, and food and beverage revenue per patron increase of 6.5%. International food and beverage revenue per patron for the quarter was 34.5% above pre-pandemic Q2 of 2019. It's worth noting in the international business that during the quarter, we saw a 27.6% decline in other revenue. This decline is associated with relatively high levels of gift card and package ticket expirations, and also relatively high theater rental income, all in the prior year period, and associated with the impact of the COVID-19 pandemic on our business. As the industry box office continued on its recovery trajectory, our revenue growth in the quarter was enhanced as guests responded favorably to our targeted marketing campaigns and increasingly adopted our industry-leading app. In addition, our creative food and beverage options, such as movie-themed cocktails and unique collectible items, encouraged frequent visits to the concession stands, all contributing to both revenue growth and our overall profitability of the business. Furthermore, visually stunning and action-packed films inspired audiences to experience our premium large format offerings. Premium large format revenue, including 3D, represented 30.1% of domestic admissions revenue in Q2 of 23, compared to 26.7% in the second quarter of 2022. And in our international markets, premium format revenue represented 16.3% of admissions revenue, compared to 15.7% in the second quarter of 2022. Moving to the balance sheet. We ended the quarter with liquidity of $643 million, comprised of $435 million of cash and cash equivalents, and $208 million of undrawn credit facilities. Operating cash generated, this is a non-GAAP measure representing cash from operating activities after deducting capital expenditures and before both debt servicing costs and deferred rent payback, was a positive number of $100 million for the quarter. This is almost double the operating cash generated in Q2 of 2022. Our top 2 capital allocation priorities remain 1, liquidity, and 2, strengthening the balance sheet. During the second quarter, we continued to make progress in this regard. We raised $34.2 million of gross equity capital. We repurchased $42 million of debt at an average discount of 34%, and we repaid $27.1 million of deferred rent. The deferred rent balance at the end of the second quarter was $96.5 million, and we plan to reduce this balance by another approximately $40 million by the end of this year. So this year to date, we've raised $189 million of gross equity capital. We've lowered the principal value of our debt by $245 million through debt repurchases or exchanges of debt for equity, and we have repaid $61 million of deferred rent. Adding that all up, we've reduced our liabilities by $306 million thus far in 2023, and a total of $689 million since the beginning of 2022. In addition, we began the third quarter of 2023 with a purchase of yet another $24 million of debt during the month of July at a discount of approximately 28%. CapEx for the quarter, net of landlord contributions, was $46.6 million, and we expect net CapEx in 2023 to be in the range of $150 to $200 million. During the second quarter, we also continued to actively manage our theater portfolio. We added 2 new theaters and we closed 16 theaters. So this brings the total number of locations closed since the pandemic began to 152 locations, and the total new locations opened to 57 for a net reduction of 95 locations. And note that the combined 57 new locations continue to outperform the 152 closed locations prior to their closings. The pandemic almost crippled our business. Since then, we have made enormous progress in enhancing the movie-going experience at AMC. This has resulted in very meaningful improvements to our per-patron profitability metrics. At the same time, we've also maintained strict cost and capital expenditure discipline. And because of our actions and a rapidly recovering industry box office, our revenue and our adjusted EBITDA have shown strong growth. And we have also been very active in the capital markets. We've taken opportunities to strengthen our balance sheet and to prepare AMC for a bright future. With the post-pandemic record-breaking second quarter behind us, our recovery to date is clear. However, we're not yet ready to declare victory. The box office remains around 16% below pre-pandemic levels, and there's some downside risk with the ongoing screenwriters and actors strikes. And with our fixed cost structure and relatively high debt servicing costs, these are exacerbated by interest rate increases over the last 17 months, we continue to burn cash on the bottom line. Based on what we know today, we're optimistic about the remainder of the year, and we believe that the 2023 box office could exceed 2022 by more than 20%. However, if the strikes are prolonged, or if our ability to access the capital markets is constrained, then our ongoing recovery glide path and our ability to continue to take the necessary actions to strengthen our balance sheet and to ensure a full and sustained recovery may be in jeopardy. And now I'll hand the webcast back over to Adam.
Thank you, Sean. I'd like to give you all a brief update on 7 specific items related to some of our thinking, as well as our exciting ongoing initiatives and our current plans. First, on liquidity. We've made many public statements throughout this year and again in recent weeks that AMC has skillfully charted our way through turbulent waters at a time when several of our most important competitors failed, and that we watch our liquidity position very closely. We've made it clear that our strategy first is to survive and then to thrive. Of course, we are heartened by the fact that we had $643 million of liquidity at the end of the second quarter of 2023. But some who follow us closely nonetheless underestimate the potential for cash burn in the seasonally weaker winter months. This is especially true given the uncertainties of the writers and actors strike, since no one knows when they will end. We intend to make sure that AMC does not run out of cash by continuing to seek the flexibility to raise fresh capital on the best possible terms. Our highest obligation to stakeholders is to avoid the pitfalls that sank others in our industry into financial ruin. Second, on balance sheet management. In the second quarter, we methodically raised $34 million of equity and retired $42 million of debt. Sean, in his remarks, gave a lot of other statistics, various time frames of how much equity we raised and how much debt we retired. I am particularly intrigued by this statistic, which you haven't heard yet on the call. Since the creation of the APE preferred equity units in August of 2022, about a year ago, AMC raised $418 million of equity and retired $548 million of debt, including deferred rent. Needless to say, this is very helpful as we contemplate our current liquidity profile. Third, on so-called PLF screens, premium large format screens. As I mentioned earlier, a PLF screen grosses about 4 times a regular non-PLF screen. So it's kind of obvious that we're happy that we have more PLF screens than any other movie theater company in the world. And assuming that we have sufficient cash reserves to invest in growth initiatives in a big way, which at the moment we do not, but we could, looking a little further forward, assuming we have sufficient cash reserves to invest in growth initiatives, we would intend to add a significant number of additional premium large format auditoriums to our system. Fourth, on innovative theater programming. Over the past 2 years, we have experimented with sports programming and have featured great musical artists on our big screens. We will continue to look for opportunities to expand those innovative efforts. Fifth, on popcorn. Our new lines of ready-to-eat and microwave popcorn for the home are literally flying off the shelves at Walmart stores throughout the United States and on Walmart.com. They were launched in March and April of 2023, and we would describe sales as being brisk and pleasantly ahead of our expectations. So much so that we are now looking seriously to expand into other grocery chains and other retail outlets. Once we get to a full national rollout in multiple channels, which could take a while to be fair, but based on the early results so far, I would not at all be surprised if this turns out to ramp up, perhaps becoming up to $100 million per annum revenue source for AMC Entertainment. Next, on premium gourmet candy. Our popcorn line has been so successful that we are now confident that we should keep going in the area of food. So much so that I expect that later this year or early next, AMC will definitely introduce a private label line of various AMC Theaters branded premium gourmet chocolate candies and gummies. I'm eating some samples right now as we speak on this call. The taste and the packaging are wonderful in my opinion, And speaking of the taste, these chocolate-covered pretzels are like to die for good. Like, John, like move them away. I can't, no more. Calories, calories, calories. We believe we will be successful with the candy lines as we've been successful with the popcorn line. It goes without saying, of course, that we will still sell Hershey's and Nestle products in our theaters. But just as a year or so back, we asked the late Orville Redenbacher to make some room on shelves for our popcorn, so too, we will ask the long-gone Milton Snavely Hershey and the long-gone Heinrich Henri Nestle for their understanding that premium AMC candies coming to AMC theaters are now in the works as well. And the last item on merchandise. Early in the period where retail shareholders took control of AMC, which basically started in earnest in January 2021. Through suggestions that came in on Twitter and other channels, retail investors directed our attention to the possible profits that can come from the sale of movie-themed merchandise and AMC-branded merchandise. We've had meaningful successes in this area, especially with our collectible popcorn vessels, sold almost weekly in quantities of between 25,000 and 100,000 units almost each weekend at prices that have ranged from about $20 to about $65 each. We plan to significantly expand our merchandise efforts in 2024 and beyond, with a greater variety of items and a larger available quantity of items for sale. It is not uncommon today for us to sell out of some of our movie-themed merchandise in the opening weekend of a movie's release. Movies run a lot longer than the first 72 hours, and I think our merchandise business would expand if we have greater supply to sell. In closing these remarks, I'd like to address directly the millions of our AMC shareholders, so many of whom pay attention to what I say on Twitter and to these earnings calls. In a tweet yesterday, I expressed my sincerest possible gratitude for all of your support. If you read my Twitter feed, though, as I do, you'll see there's a lot of light, but also a lot of heat directed my way. That's okay, I have broad shoulders, and the variety of views comes with the territory when there are so many voices and so many opinions. As I read these inbound comments, I see that some who care about our company deeply still don't get the nuance of our current circumstances, or wish that I would just cheerlead only the good news. But that's not what CEOs are supposed to do. The success we have seen this year in our theaters, especially including Q2 and Q3 results so far, is what makes us optimistic that we are on the right road, and that by 2024 or 2025, we will look back on the decade of the 2020s with amazement and pride as to how well at AMC we dealt with the most challenging hands of cards ever directed our company's way in the century plus of its long existence. But despite that medium-term confidence, in the short term, and some of you don't like to hear this, but in the short term, AMC has some serious liquidity issues to solve. We should not oversimplify that it will be easy to overcome the obstacles and hurdles in our path. However, this AMC management team has proven over the past few years that AMC is highly able in liquidity management. So I have every confidence that we will continue to execute well to do what is needed. To the extent humanly possible, I am determined that at AMC, we will rise to every and to any challenge. Thank you for listening. Sean, let's now move to questions, both from shareholders and from industry analysts on the call.
Thanks, Adam. So quite a few questions from shareholders here. First question relates to our strategic direction. And the question is, what are the top priorities for AMC both today and in the future? Are we considering M&A opportunities?
You know, so some of you have asked me on Twitter, like, why are we still talking about COVID? And that's because in the movie theater industry, the industry-wide box office, which is the basic size of our industry, is still below 2019 levels. And that's a lingering problem because if you look at the box office, 2017, 2018, 2019, this industry was sized for about an $11.5 billion box office. And in 2020, it was $2 billion. 2021, it was $4.5 billion. 2022 is $7.5 billion. This year, I hope it hits $9.5 billion. Might hit more, might hit less. We won't really know till the end of the year. It's going to be a lot more than 2022. But we're still down below pre-pandemic norms. And I remember when we shut our theaters in March of 2020, and people were predicting we'd be back to normal at 4 to 6 weeks. Our theaters were shut for 5.5 months. Some of our theaters were shut for almost a year. And the box office fell by more than 80% that year. And it still was, way below pre-pandemic levels. Even now, 3 full years later. So we've had to adjust our strategy because the movie theater industry has come back slowly. And so our strategy has become survive, then thrive. We have had to take the steps to make sure this company survives. And not all companies in our industry can say that. Other companies with big brand names, both big chains that you would recognize and small chains that had a cult following in some markets in Texas and California, they went bankrupt. And a lot of their theaters didn't reopen. So first we have to survive. And as I said, we like the results in April, May, June, July, and August of this year are fabulous. So I think we're going to start to move from the survive phase to the thrive phase. To make sure we get there, and you've been hearing me say this as a broken record for this year, we must be able to raise capital if we need to. Because the dumbest thing we could ever do as a company is run out of cash. And other companies in this industry have run out of cash. And some of the armchair quarterbacks on Twitter who give me advice every day, if I'd followed their suggestions, we would have run out of cash a long time ago. Or if I follow their suggestions now, we'll run out of cash soon. So the most important thing as part of the strategic direction of this company is make sure that we have ample cash reserves to outlast the aftermath of the pandemic. Because I've already said, in 2024, 2025, it's going to look pretty bright. But if we were to run out of cash before we get to 2024 or 2025, that would be a disaster. And that's a disaster that I simply will do everything in my power to make sure that this company avoids. So when we talk about strategic direction, I think that we've got to make sure that we put this company in a position to be able to raise capital. That's what the shareholder vote on March 14 was all about. Next, as we have sufficient cash to survive to the glory days of 2024 or 2025, there are a lot of things that we can do with that cash. Because right now, Sean said we've taken our CapEx spending down to $150 to $200 million a year. 3 or 4 years ago, we were investing $500 million of CapEx a year in our business. Right now, it's prudent to husband cash, to save cash, so that we don't run dry. But there will be a time that we have much more cash reserves than we have currently, either because we will generate it from operations or because we'll raise it. And then the question is, what do you do with that cash? And here's my list. First, we need to spend some money to affect what I'll call deferred maintenance on some of our theaters. We pulled our CapEx spending way down during the COVID impacted years. And we've seen examples of leaking roofs and breaking air conditioners and boilers that provide heat in the winter that are towards the end of their life cycle and they're just breaking. They need to be repaired. We have thousands of our screens where the movie projectors are getting towards the end of their useful life. And we are going to need to invest capital to replace those projectors. The good news of that, however, is we've already made the decision that when we replace these projectors, we're putting in laser projectors, and laser lighting is it's a much brighter, sharper picture on the screen, and it's quite an environmentally friendly initiative too. Next, there are growth initiatives within our theaters. I've already mentioned on this call premium large format screens. In the state of New York, until just recently, like in the past 12 months, it was illegal for most movie theaters, to sell alcohol. The New York legislature recently changed that law. But that means that we have a whole bunch of theaters where we probably should build full alcoholic bars into our theaters. One of the things I'm interested in is putting more variety of food items into our concession stands, which might, because our food and beverage sales are at a record high, that might require, putting in $10,000 to $20,000 of equipment in a concession stand. $20,000 doesn't sound like much until you realize we got to put it in 575 theaters. All of a sudden, it's $10 million. Next, we have had some circumstances where we've been able to add theaters to our network, and we were able to bring them into our system very inexpensively. When I say very inexpensively, I'm saying we've been all in. Purchase price, transition costs, we've been able to bring some theaters into our system at 3 to 4 times expected EBITDA. That is such a bargain. We ought to do that all day long if we can find opportunities to bring good theaters into our network inexpensively. There's M&A opportunity. And there's 2 kinds of M&A opportunity, right? There's just buy some movie theater chains, if we can do so, and I want to emphasize this, if we can do so at a bargain basement price. I have no desire to pay up to bring movie theater chains into our network. But if we can get them at a cheap price, that's value creation for our shareholders. And if we don't raise a lot of cash, maybe we can do some transformative M&A as well, where we can look to expand to being something more than just a pure movie theater play. So that's sort of the strategic roadmap of where we might invest our monies if we have more money than we have today.
Yeah, thanks, Adam. I think that addresses that question very nicely. There's some questions here about our theater footprint. So, what are the expansion opportunities of that footprint, both U.S. and internationally? And what are the opportunities to continue to close theaters, underperforming theaters, and improve our overall profitability? And also, how does premium large format fit into those plans?
So on the theater footprint, we've managed this like maniacally over the last 3.5 years. You gave the stats earlier that we opened 50-something theaters, we closed 150-something theaters. We didn't open any of the 50 lightly, we didn't close any of the 150 lightly. When you look at a company that has almost 1,000 theaters globally, we got some theaters that are brand new, we got some theaters that are 25 years old. We got some buildings in great shape, we got some buildings sort of at the end of their useful lives. We've got theaters where we've got great rent deals with landlords, and we've got theaters where we have terrible rent deals with landlords. We've got some theaters in unbelievably successful malls, and other theaters in unbelievably unsuccessful malls. And so we have a whole department here, our real estate department, our development department, that's paying attention to every single one of these theaters, every single one of our landlord relationships, and where the theaters are successful, we cheerfully pay the rents. Where the theaters are not successful, we enter into cooperative dialogue with the theater landlord to see if they're willing to lower our rent, to keep us around, to continue to drive traffic to their other properties nearby. And in many cases, we're quite successful in getting landlords to adjust rents. In addition to that, I would say we have spectacular relationships with all of the large mall operators in the United States. The Simons, the Brookfields, the Westfields, and a whole slew of other theater owners. And I could name another probably 10 REITs who have, anywhere from 5 to 50 of our theaters. I think we maintain excellent relationships with each. One of the things, because our relationships are so good, as they build new malls, they often want us to come along for the ride. Westfield just opened up a beautiful new mall in Topanga, to the northwest part of Los Angeles. And that theater that we opened there is already one of the 20 most profitable theaters we have in the United States. It opened in the past year. A year and a half back, actually I think it's 2 years back now, we brought in the Grove, an Americana brand in LA and in Glendale, in Southern California, at Rick Caruso's retail establishments. The Grove is now the third most profitable theater in the entire United States for AMC. So that's an example of a theater that we brought into the network just in the past 2 years. And we continue to talk to landlords all over the place that we're ready, willing, and able to bring theaters into our system if we can do so on good economic terms. And as an example of that, literally just in the last 2 weeks, we brought a theater into our system in Reading, Pennsylvania, It's not exactly as big a market as downtown Los Angeles. But that's a theater where the seats were already reclined, and that theater enjoyed a 65% market share of its surrounding communities, and we got a very attractive price that brought that theater into our system quite reasonably. So we are continuing to look at pruning our system downwards, where we have underperforming theaters and can't renegotiate rents. We're looking to keep our theater network the same size it is today by renegotiating rents. And we're looking to grow our theater network as our theater landlords want to take us where they go. And then, of course, I mentioned there's always M&A opportunity as well, but there's nothing immediately on the horizon to report on that front.
Thanks, Adam. Let's talk a little bit about food and beverage. There are quite a few questions about that because it's been enormously successful for us post-pandemic. Question here about plans to potentially expand the menu offering at theaters, or plans to open restaurants at a theater, or take food orders directly from the seats.
So, look, this is this is something near and dear to my heart. I'm an eater. If any of you have seen me sideways, you know, I'm not the slimmest guy around, although I weigh a lot less than I did 20 years ago. And no more chocolate-covered pretzels. Or the chocolate-covered almonds are pretty good.
That's good.
Anyway, I think AMC was leading the way before the pandemic in having the biggest variety at our concession stands. Remember, we introduced something called feature fare all across the system here in the United States, where we made a lot of progress and variety. We put in as a brand standard for all AMC theaters in the United States, Coke Freestyle machines. I counted more than 140 flavors come out of those Coke Freestyle machines. I think that's an enormous advantage for us over theater chains, which still are offering 8, 12, or 14 flavor choices. Those Coke Freestyle machines don't come cheap, but I think that was a very smart investment for us. But then COVID hit, and when we came out of COVID, we came back with a very limited menu, which we tried to grow back to sort of the feature fare levels. But then came supply chain shortages, and then came labor shortages. And all of a sudden, some of our more complicated items were difficult for our staff at the concession stands to execute, which then would slow down delivery, which would lengthen lines at the concession stand. And you're always trying to balance variety of items against speed of purchase in a concession stand, because no one wants to wait in a long line. I don't blame them for that. And I'd say where we are today is we're back up to about 80% of the feature fare variety at the height of where we were in 2018. And in talking with our food and beverage department, they'd like to see our variety of items expand up to feature fare levels, within 12 months of today. But, that was just talking about variety of menu items. But when you look at the success of our food and beverage effort, remember, let's use United States numbers. Pre-pandemic in 2019, we were doing $5 a head in per patron food and beverage spending. In the United States, we're doing over $8 of food and beverage spending today per head. That is a staggering increase when you realize that if you take out only cost of goods sold, so this isn't the labor at the concession stand and not the capital cost, the equipment and stuff, but just like the cost of the syrup and the cost of the corn and the cost of the hot dogs and the rolls and the nachos and all the stuff, the candy that we sell. Like, we have more than an 80% margin in our food and beverage business. And for our food and beverage business to be up as much as it is, 736 was the number globally in the second quarter. This is a staggering success for us. So I really want to compliment our F&B department, led by a guy named Hank Green, we're just hitting that out of the park in F&B spending, and that's what's driving such a big increase in per patron profitability for AMC. Remember the stat I gave, our per patron profitability, this isn't just food and beverage, this is total per patron profitability. It's a combination of expense reductions, ticket price initiatives, food and beverage success. Our profit per patron is up 40% in the United States. It's up 22% internationally. These are stunning numbers.
Adam, our shareholders appear to be uniformly very excited about the retail popcorn sales and our initiatives there. And so there are questions about, do we plan to expand this further? And are there other potential revenue streams similar to retail popcorn that can help grow the business?
So, yeah, I couldn't be more excited about the popcorn success. We spent over a year in our food and beverage department working on the right recipe for home corn, because whether it was in the bag ready to eat or microwave pouches that you microwave at home, we wanted it to taste just like it tastes in the movie theater. And by the way, there's a secret to our popcorn. Not all popcorn is created equal. There are different grades of corn, and we buy the best there is. So one of the reasons why our popcorn is so good at AMC theaters is we buy the best corn. It's like graded. And so our corn that's at home tastes great, and the sales, like Walmart can barely keep it on the shelves, and they keep on reordering and they keep on selling out. So yes, we gave Walmart a 6-month exclusive because they gave us so many store locations. We rolled out the AMC popcorn in like 2,600 Walmart stores. Very few brands get to roll out on day one in 2,600 Walmarts. Normally you'd get a fraction of that, and you prove your way. But they believed in our brand, and it's been a big success, and we're happy to give them the full exclusive. But yeah, as soon as the exclusive is up, we will have conversations with all the major grocery chains, with all the major retail outlets in the country. I'd like to see, it'll take a while, but I'd like to see AMC popcorn on every shelf where you can buy snack products. There are other things too. I've already talked about the candy products. That's next. And there are a whole host of other ideas that we have to grow revenues for the company, but in the interest of time, I'll either save those for another earnings call or for Twitter.
Final question here about the trading of our shares. And there's a few questions here related to, can you comment, Adam, on the very high level of failures to deliver in AMC Securities?
Yeah, I can, sort of. I mean, there's a limit to what I'm supposed to say on this subject, but I can say some things. I know it's maddening to so many of our shareholders. I read my Twitter feed, guys. I know what you think. I know what you say, because I get thousands of messages a day. And since, for those of you who didn't send Elon Musk his $8 a month for a blue check mark, since you're limited to a couple hundred characters, you can read a tweet pretty fast. I know you're really frustrated by the high number of FTDs. And as many of you, not all of you know, but as many of you know, an FTD is a failure to deliver a share within the normal trading closing cycle, which is within two business days of the trade. And so, if someone never delivers a share, they're breaking the law. But if they deliver the share 3 days late, one day late, which is on the third day, they show up as an FTD in your eyes, but the trade did consummate. A little slow, but it consummated. If more than 0.5% of our trading volume is in an FTD status, then we go on something called the threshold list. And we've been on and off the threshold list many times in 2023, and for that matter, in 2022 as well. And this drives some of you like out of your minds, because I read what you say, and I say out of your minds in a nice way. I don't mean it in a nasty way, but you're angry about it because you think there's something wrong going on. And again, I've got to be very careful what I say legally, but I can tell you this. On multiple occasions, even multiple occasions this year, we have gone to the New York Stock Exchange at very high levels to make them aware of our status on the threshold list. And similarly, we've gone to FINRA, which is the regulatory body of the public markets, and we are voicing your concerns. And unfortunately, I know many of you would like to see the results of what they sent us back. It's not so easy for us to share that information with you. But we're aware of the concerns, we're aware of them ourselves, and we are taking them to the appropriate regulatory bodies.
Kelsey, that's going to do it for the prepared for the prepared questions from the internet. Can you give the instructions for Q&A, please?
Thank you. Ladies and gentlemen, we'll now begin the question and answer session. Should you have a question, please press the star key followed by the 1 on your touch-tone phone. You will hear a 3-tone prompt acknowledging your request, and your questions will be polled in the order that they are received. Should you wish to decline from the polling process, please press the star followed by the 2. And if you are using a speakerphone, please lift the handset before pressing any keys. One moment, please, for your first question. At this time, there are no questions. You may proceed, Mr. Merriweather.
We are after 5 o'clock, which is supposedly our cutoff. So I'm going to thank everybody for joining us today and leave you with a couple of thoughts. One, we had a fabulous quarter in the second quarter of 2023, and July was gangbusters, and August is gangbusters so far. And for those of you around the country who are listening in the United States, it's really hot in the United States right now. Most of our theaters are quite cool, and they have some really good movies on the screen. So if you haven't gone to see Sound of Freedom, or Mission Impossible Dead Reckoning Part 1, or Oppenheimer, or Barbie, or Haunted Mansion, or all the other wonderful movies that are out, go to an AMC theater near you. We'd love to see you in our theaters. Thank you for joining us today.
Ladies and gentlemen, this concludes your conference call for today. We thank you very much for participating and ask that you please disconnect your lines. Have a great day. Participating and
Well, I'm going to tell everybody on YouTube that's the earnings call. I'm going to go ahead and close the stream because Twitter is still not letting me get volume from the space call on my PC anymore, which I've heard a couple people say that X is having troubles in space calls, but I want to just thank everybody on my YouTube. Actually, I'll leave it open and I'll just put the microphone under the phone and we can continue without like the visual of Twitter on the screen. So, but 100 million in popcorn, if they can reach that, that's great. That's pretty far under what I was estimating, but that's fine. 100 million would actually be really good. But it's always something about, oh, we know you're mad at FTDs and we know this and we know that and blah, blah, blah. And it's like, no, you should come out and say, we're tired of our company always being naked shorted via these failure to delivers consistently for 2 years is what it is. But again, the big lie, the big con was Adam Aaron trying to act like he was actually for retail investors for the past 2 years. He is an industry CEO and a salesman, and he fooled everybody. So, but I 100% agree that they need to convert ape and they need to raise cash, or they are not going to survive by mid 2024. They'll be filing for bankruptcy. It's not a matter of if you like Adam Aaron or not. It's a matter of, do you understand the balance sheet and do you understand the cash burn that's being created? It's all part of the plan. So if we do not convert ape and raise cash in a situation where it's beneficial for shorts to cover at the same time, then this play's done. It's over. And all the AMC common stock people, in my opinion, are going to end up losing everything. So
that was kind of weird. There wasn't one analyst question.
You know why? Because they're all set up for arbitrage. They know what's coming.
Yeah. No, so, and then also, I forget his name, the CFO. So the only reason their financials would be off is if their settlement was approved by the judge. So that means they're definitely thinking the settlement's going to go through and thinking today. So that's what I'm kind of watching closely, because why else would they have done that this morning and say that? I thought that was interesting.
I also think no one really cares anymore.
True.
That's really the big feeling that I get, is that it's just a done deal. Who cares? Everyone's exhausted. Let's just move on.
Which is part of the game plan. I mean, I do think there was at one time we had them with a lot of shorts, and a big problem. But time has gone so long, it just kind of, I mean, like you said, PJ, the stock, I was watching, it went down like, 3 cents during the call. When he started talking dilution, went down a little bit, and that was it. Ape didn't move at all. Just barcoded the whole conference call.
Yep. And the funny thing is, like you said about the analysts, they know arbitrage is the only way to make money on the play. The fundamentals of the company don't even matter anymore, because if the arbitrage play goes through, they raise billions of dollars. So fundamentals at this point don't even, now that, everybody's like, oh, we had a cash positive quarter, AMC to the moon. It's like T-Dog has been online all day on every tweet going, they burned $200 million in cash to get there.
Yeah, no, it was, and that was the first 6 months. I think I tweeted a couple of times. Q2, it's over the 6 months, but they're still burning cash consistently.
Oh yeah.
So the other thing about the retail popcorn, I wish he would give. It pisses me off. He never gives what their estimates are. He never gives what actually happened. I mean, he threw out the 100 million, but that would be tough. That's so retail domestic popcorn is a $1 billion industry. That's it. If you look it up, that's 10% market share. He's thinking he's just going to get without advertising or anything. I don't see that happening.
Oh, they have to kick up advertising big time.
Yeah. And I mean, I don't think it's a bad thing. Like retail popcorn, I make fun of it, but I also say, no, it's not a bad thing. It's just, hopefully people get it now. It's not going to be this hundreds of millions a quarter profit that people post on freaking Twitter or X, whatever it's called now. 100 million is a stretch to get to, and that industry's 35% profit margin on average. So you're talking about 35 million profit a year, right? I mean, it's not bad, but it's not a game saver. It has to be in the theaters from the save money. To save the company. And I think candy's a horrible idea. It's one thing when you're kind of known for popcorn. I mean, movie theaters are known for popcorn. Everyone always laughs. It's like the best tasting, worst thing for you in the world. Like, oh, did you get movie popcorn?
what they
likes off-brand candy. I mean, this could be like Brock's and shit. I mean,
Hey
unless it's
man,
in
hey,
their
hey, don't be
theater,
talking shit on my Brock's, man. That's a Michigan thing.
that's like your grandma's candy.
You know what they should have done is they should have got with Mr. Beast and hosted Feastables in AMC theaters. And I actually got one yesterday when I was in Target with my kid, the Mr. Beast candy bar. It's good. It's real chocolate. It's not like Nestle, like pure sugar chemicalized. It actually tastes like German chocolate. And I lived in Germany.
If they do it in
for a
their
time.
theaters, I think that's I mean, he didn't specify if candy was going retail or not. Now, if they're doing it in their own theaters, that's cool. I agree with that because you can control everything. It's your theater. But if you put it in a Walmart, I mean, it's just, I don't see that. Besides people that are AMC loyalists, I guess I'll call them, no one's going to buy it.
They have to get, and I told Adam Aaron this years ago when they did the whole Nicole Kidman thing. I said, you guys have to get more creative and more youthful with the advertising. Nobody's kids know who Nicole Kidman is. They have to break into new territory. They've got to get celebrities. Like, say this, you get the Mr. Beast candy bar in the AMC theaters and then get him to do an ad for the beginning of the opening, then you're going to see a flood of people to the theaters.
Yeah, what's hurting them too is the lack of, I mean, if you really look at where movies really blow up, you know, you do have blockbusters like, not Mission Impossible, I think Top Gun, things like that for adults. But usually the big ticket movies are the children's movies. And you got Disney going crazy, like doing a Budweiser. And then most of the movies that used to be children's movies, like Barbie, are becoming more PG-13 adult movies.
Well,
so it's like they need those children movies. That's where the revenue comes. And then your kids eat a ton of crap at the theater, you know.
Will Carwile on YouTube said beer in all theaters. And that's one thing I hit on really big too. I was like, dude, the one theater we have in New Mexico, the one AMC, doesn't serve alcohol in an area where it has one Chili's in a new development. And I'm like, why would they not serve alcohol there? It's just stupid.
So there's a brand new, I think it's not 2 years old yet, Cinemark in my mall. They built it, they were going to build it during COVID. They built it right after COVID. And they were smart. It's in a shopping mall, big Westfield mall. And the concessions areas are open like a restaurant, and the bar is open to the public. So you don't have to have a movie ticket to go to the bar. And that bar is packed a lot of times. And I'm thinking, yeah, that bar is packed because people are just getting a beer, not because they're at the movie theater.
Well, we have a theater here in Albuquerque called Flick's Brew House, and there's a bar out front. And you go into the theater and you sit in the theater and you have service and you can order beer from inside the movie. Like, I legit went to watch the Dragon Ball movie that I told everybody would smash, and it did. And I was in there just getting blasted on like 7% craft beers. It was the greatest day of my life, man. So.
Yeah, I'm in California. Our theaters all have, well, the newer ones all have alcohol.
Yeah.
But that was just, it was a disappointing call. I tweeted Ethan because I was kind of thinking about him during the call. That guy's head must have been exploding when Adam Aaron was talking.
Oh, yeah. He targeted Ethan and Al and Daily Blend directly, which I don't disagree with them. Ethan went off the deep end and decided he wanted to harass me because I have a different opinion, even though I've hosted him on calls and let him speak his mind. He comes at me with an attitude and texts me on my private number a bunch. Daily Blend's a joke. He has no idea what he's talking about. And from the beginning, I told these guys, and I'm recorded doing it, I said this lawsuit is a setup between Allegheny and Adam Aaron to force 6.5 million shares into the market after conversion to dilute it further so shorts can have more shares to play with from the brokerages. And they said, no, Judge Zern's going to put him behind bars. Ape's never going to convert. And they slowly went to, we won because Zern delayed the settlement, which was a joke that actually helps Ape conversion, what she did. Because now Ape shareholders are not actually going to get any type of settlement. It's only AMC, which lessens dilution, which is good for us.
Like, and you have to remember that court case is just about the settlement. They keep taking it to these different levels. Now, Ethan is right. Like, if he does get things on the record, it opens up future things.
Absolutely.
But it's like, I mean, people are like, Zern needs to throw him in jail. I'm like, that's not what this is about. It's about accepting the settlement or not.
So real
all that's about.
Real quick macro note, I told everybody to buy puts on UPST at like $70 and I wrote it down to 53. I am kicking myself in the ass right now because with the bank downgrades, UPST, which I've been talking about for a long time, I played the upside, is now 21% after hours. That's the company that gives out all these crappy loans, and they got bought, like a bunch of their unfacilitated loans got bought for $4.5 billion. UPST now, since I tweeted, is down over 40%. I am kicking myself in the ass for dropping those puts too early. So with that,
You took profit though.
I did. With that though, what's incredible is that if UPST is going back down and the banks are getting downgraded, guess what's going to happen to all these stocks that have been pumped up over the past 3 months? Meta's going back to $150, baby, and I've got good puts on that one.
Yeah, all the heavily institutionalized stocks are going to have some issues now.
Yep.
And liquidity's completely drying up with the bank problems.
Hey guys, can I chime in if you are done with your bullshit?
Yeah.
Speaking of bullshit,
I had to drop you and PJ from co-host because y'all got too many people blocked.
I could only listen for so long, man. Come on, I got something to say too. I have, it's just crazy, man. With all this, everybody, all these years, and we have to still, this piece of shit have to still use COVID as an excuse. He should not be even a CEO. If after 3 years you're still using that excuse, all the money you had, he's still spending money like a drunken sailor. They did not care about the shareholders who saved this company. 3 years of this shit show, and we had the best quarter, and this was one of the shittiest earnings call. And they would not even let people take the call or to talk to them, ask questions. Rich tried to ask them and call them and try to ask a question. He was vetted like he was like some kind of criminal, and then they just dropped him in the middle of the call, so he could not even ask questions. This is what it had to come down to, the people, those who have saved this company, made these pieces of shit millionaires. They won't even let people ask a question.
annual conference
So
call.
they're controlling the narrative then.
Yeah,
if
exactly.
they're not allowing. That's disgusting.
It's just sad. Rich just told me, he's like, he was on the hold. They vetted him, how much shares he have, like what was his on dilution, what was his views, everything, like whether he was on Twitter. Like if you are true in your heart, why would you be doing shady stuff like this? The only
And if
people
you
who
were
does
really, sorry, Sugar.
No, this whole thing has been a disgrace. Nothing to be proud of. Once I used to be proud of, like I'm a retail investor, part of the movement and community and all that. This thing has just turned into a disgrace. Everybody, all these AMC ideas and all that bullshit, what did it do? I'll give them an idea. All these cloud chasing hosts for likes and followers and shit, open a strip club. And go do that shit. They might as well make money, and AMC will make more money than selling these pieces of popcorn and all the other bullshit.
Open
Genius.
So
I would go to that.
They pinned it to the top. Months ago when Algo Hack said that it was stunt marketing, the popcorn was stunt marketing. We still don't have numbers on that popcorn. We have no idea how much was spent on that popcorn. We have no idea what the profit margin is. We have no idea about anything. He has never given us numbers. And I don't believe this popcorn at all. I don't.
Yeah. PJ, it's probably lucky it's broken even by now because there is startup costs, and Walmart takes most of the profits. So, I mean, anyone could throw $100 million out, and then you can fact check it and go, okay, well, 3-4 years, he's shooting for 10% market share. That's probably doable. I mean, it's not an unrealistic number, but it's BS. He doesn't, he said it's meeting their expectations. Well, would you mind sharing those expectations with us?
Yeah, he didn't put out any
them.
metrics on.
No. Credit card? No. What about Zoom? I mean, the list goes on and on. And then,
He didn't
Sugar,
even
to your
talk about
point,
the credit card.
I forgot about Zoom.
yeah, remember Zoom was supposed to be huge, remember? The thing that killed me when he was going down the laundry list of what he would do with money is he didn't mention the phrase reduce debt once. Not once. It was all spend, spend, spend.
Yeah, that's the whole goal at the beginning was Adam Aaron to get in there, spend as much as he could, run the company up massive debt, go into death spiral lending, and then it goes to bankruptcy and they consolidate under a new owner, right? That's what they did to all the other companies. When we jumped in and the stock ran and equity built up into the stock like crazy, they had to find a way to drag the equity back out of the stock and bring it down to normal ranges. But when they realized with Adam Aaron, and I personally believe Adam Aaron's ape plan all came from Mark Cohodes. Mark did T0, Adam Aaron saw it and goes, well, we could actually do this with preferred stock and not cause a short squeeze, and at the same time get the shorts to unwind so we can raise billions and just pay off what we ran up at the beginning of the year and then start the whole process over again over the next 10 years. 10 years from now, AMC will be in the same seat. They'll be like, we burned all our cash. We'll have another war, another pandemic, and they'll go back to death spiral lending and they'll do it all over again. And meanwhile, the bondholders are just crushing it.
It spans, 10 years is a way long.
Ape's been a long-term plan.
Yeah,
the preferred stock has been, but Ape has not.
Ape has been around. They have been planning this for a good 2 years.
The preferred stock coming out, they planned that in 2013, but breaking it down into units, that's a newer plan.
Spence, can you hear me?
Yeah, go ahead.
You know what was one of our biggest mistakes? If we would have, as much as it hurts me to say, if we would have just let it go through bankruptcy, wipe out all the bad debt, would have kept just the good screens, good theaters that make money, we would have been a lot better. Look at what Cinemark is doing.
If they went into bankruptcy, common stockholders would have lost everything.
It's Cineworld. It's Cineworld, Sugar, not Cinemark. Cineworld's the one that went bankrupt.
But I'm talking about before retail even stepped in.
Yeah, it would have.
About before we all would have, if they would have just done that, and all the retail would have stepped in, and we would have been a lot better.
Well, because they probably would have, but we made them a lot of freaking money. I mean, we all bought back then. I mean, think of how they felt when we saved the company from bankruptcy and got that run up, and they were able to sell their freaking shares between $20 and $40 a share, and they never bought any back.
Well,
not one person bought a share. Just imagine that. Not crazy. One, like even Highcrofts. Look at that lady. She's doing the same shit Adam Aaron is doing.
I mean, if you make $40 million off of retail running the stock price up by supporting your price, at least throw us a bonus. Say, hey, look, I'm going to put $20 million back into the stock.
I'll
keep 20. I'll keep 20 back in.
I hate to say this, guys. You guys know I'm not Adam Aaron's biggest fan. And I'm kind of on the fence. I'm in between, like, wanting to throw him in jail, but I also know the ape plan is going to work, which is what I'm trying to tell people. They're like, oh, you hate Adam Aaron. Oh, well, you're against the lawsuit. And I'm like, that's because I'm unbiased in the play. If ape converts, all the retail shareholders are going to have their best opportunity to either clear their bags or make money depending on how they're positioned. Now, if you keep buying AMC common stock knowing this is coming and you ran it up and bought it $6, $7, $8 a couple weeks ago, then you have failed to learn anything over the past 3 years, and that's your fault. Like,
yeah, the only people are going to get killed on it are the ones like you're saying they're holding. I like the way you call it legacy AMC. I know it's a kind of a made up term, but it makes sense. I mean, look what happened to Mullen today.
Yeah.
I mean, how long we listened to Mullins? All of that. It's just reversed. It just announced another 9-to-1 stock split.
Yep.
And that's not giving enough either.
You got to keep this in mind too, T-Dog. There are people, those who average cost is between $15 to $20. I mean, those people, what are you going? What?
They've had 2 years to fix that. Sugar.
Mine was $14 in December of last year. I was $14 a share, and I had two accounts. One was $14 a share. I fixed it, and I didn't just fix it with AMC either. I mean, there's more stocks out there.
A lot of people were not able to fix it because the same people from the were saying buy and hold for 2 years, man.
I agree. That's why I go to town on YouTube, and people hate me and block me because I can't handle grifting. That BAM guy, Bigham's getting blown up. all those guys destroyed so many people, and people still freaking follow them.
The guys,
You know?
the guys that are grifting are deep bag holding AMC, and they're making money on YouTube. So they keep telling their followers.
I honestly think they sold. They've made money. They're just grifting off it.
That's true too. But here's the thing. This community and the AMC play failed because the retail investors refused to take personal responsibility for their portfolios. And then when Mark educated me and Sugar came out and started going after Adam Aaron and we all realized what's going on, that's been over 12 months. If people are still screaming buy AMC to the moon and they're buying at $6-7 every time it runs up, then I have no power to change them. But I am not going to lose money because they have bad investment practices. The day this entire community takes personal responsibility for their own investments is the day that we'll all end up winning.
Yeah, some guy just tweeted me when I was talking to Ethan saying he thinks AMC should be $12.50 a share, not $12, $1,250 a share. I responded, and he goes, "It's criminal. It's not $12.50." So it's criminal. You're saying that, and he told me to F off and block me. So I mean, I have no compassion for people that think it's going to be $1,000 freaking dollars a share.
If reverse, even let's say reverse split passes, right? Like what you guys are saying, you know, just to break it even for people, the share price has to be what, 150 or 170, depending on their average cost. Do you really think that all these people, those who have all the control in this market, they will let the share run up like that?
Yes, because Sugar, the people who control the market, Adam Aaron went to them and said, I'll create an old-fashioned arbitrage play where if you let it run up, you win 3 different ways. That's what's going to happen.
I don't know if it will run up, but I kind of used to think it'd get knocked back down to 5. It may not, because that, because they are obviously playing with, I don't say with each other, that doesn't sound right, but they're internally talking about this, obviously. And if you can keep the share price at like $25 a share and keep it between like 15 and 25 after the reverse split, it makes it easy for him to get $4 to $5 billion.
Yep.
Right? And then
attractive.
And then the bondholders are happy because, I mean, what are the bond rates on, like 30% on AMC?
37% on the one that was callable July 28th. So
those guys don't want AMC to go bankrupt. I mean, yeah, they'll get their money back when AMC goes bankrupt because bondholders get paid first. But shit, they're holding these bonds and we're giving them money and they're making 37% on the freaking bonds.
Well, here's what's happening is they are now short AMC and long APE. When the conversion is approved, APE's going to skyrocket. They're going to make money on APE on the way up. They're going to cover their AMC shorts on a Friday after hours, like 10 minutes before market close, into the dark pools. And then the market makers and players and FINRA and everybody who's in the game is going to slowly let AMC, it's either going to open up at like 30 and pop with a gap up with halt, or they're going to actually control the offloading of the short interest via the conversion. So they're going to cover shorts in the money. Then that's going to prevent any type of like infinity squeeze type situation, but their converted APE longs are going to go up into ranges that I think could hit $100 when Adam Aaron announces we're going to start raising cash on a dilution. They dump their AMC. Adam Aaron raises cash. We drop back to $30. The bondholders get paid a premium because some of the bonds are callable. So they just won on their short, they won on their long, and they won on their bond, right? Then when AMC dumps back on them reshorting it down to like $20 again, they buy the whole company up and start all over again. They'll all take 10% positions.
Yeah, I mean, and volatility is what, I'm not Pedro, I can't remember Pedro from Philly or whatever his name, Pedro made a good point once when he was talking about shorts. Shorts just don't want it to go down. If you watch, they like to drive it down, then they'll let it back up, they'll drive it down because then they keep making money on the ups and downs. A true short, institution shorts, not just individual retail type of shorts. So I could see, I mean, the volatility is going to be huge. I mean, I'm trying to cash up outside my 401k for options when it goes, if this gets approved, because it's going to be all over the place. I'm going to probably buy puts and calls at the same time 6 months out and just sell them on the ups and downs.
I just noticed Frankie changed his profile picture to Spencer Stuckey.
Is that who that is? Because I saw him. I didn't know whose
Frank.
profile that was before, and I think that's hilarious.
Dude, he's got one of the funniest memes ever in this whole AMC thing. He always has the best memes.
I didn't know who that was. I saw that earlier today. Oh yeah, I guess it says Frank here. Now I'm looking.
He just
awesome.
tagged me. This is hilarious.
Yeah, he's here. It's pretty funny.
Hi guys, let's see what happens. But this it's just sad what has to happen to region. After all we did, everybody did, and this is what it has to come down to.
Let me say this real quick before are you leaving, Sugar, or are you staying?
I gotta go sell my stuff, man. I gotta make money. I can't.
I'm just sell that Ripple.
Let me say this real quick, and just to explain to everybody where I'm coming from on all my stuff lately. Look, I don't like Adam Aaron, but if I go buy a car from a car salesman who rips me off, I don't go back 2 weeks later and do the same thing all over again. That's the problem. I don't have any feels for people after 12 months, and I've been attacked the whole time, even getting attacked by Ethan now, and all these people who, as soon as you have a slight disagreement with them, they lose their mind. But if I see you buy a lemon at 29% interest from a car lot, and you complain about it, and I tell you don't do it again, and you go back and do it again, I'm done. This arbitrage opportunity is one of the oldest plays in the books in the market. It's an old Chicago tactic from the old Chicago markets. Is Adam Aaron's way of getting the big players to align with him so that they make a ton of money, but he can capitalize the common stock equity. And if you play it right, you're going to get your money back. If you play it wrong because you're listening, and I agree with Adam Aaron on this one, armchair lawyers, I call them barracks lawyers, people that are telling you that Adam Aaron's going down and that AMC is going to squeeze if the ape conversion is denied, which it's not going to be, you're going to lose your money. The judge cannot deny the ape conversion based on the lawsuit that is currently sitting in the Chancery Court. That's not what it's about. So people need to step back, follow your favorite YouTuber. I don't care. But if you are solely investing your money based on somebody telling you that AMC is going to go to $100,000 because Adam Aaron's going to go to jail because we exposed Project Popcorn in court, you are investing the same way that you have been for the last 3 years, which is why you're losing money. So that's all I got.
I just want to say one thing, man, before I go. I have made some really good friends in this community, and I hope for the sake of them that at least they get their money back. Because believe me or not, I have seen so many people lost so much of their ass. And even Adam Aaron sheeps, as much as, you don't like me or, I don't like you, I still hope you guys don't lose your ass, because nobody is going to come pay your bills. And the day you realize this, that only you will take care of yourself, no Adam Aaron or anybody, your life will start changing. Just do something with your life and not just wait around. And there are good stocks too, man. If you really want to make money, stop doing what you've been doing for 2-3 years and try to learn to make money. There are good stocks out there where you can make money and do it that way. That's all I got to say. I got to go, guys. Good luck to everyone. Let's see what happens. And, thank you for doing the call. And I'll talk to you guys soon, man. Hope you guys have a good day.
Thanks for coming, Shug. Love you, buddy.
Hey, Spence, I got a question. There, Sugar. Spence, I got a question. Thinking long term on this, at what point, and in your opinion, at what point do you see AMC actually paying a dividend when they are like right now they're profitable, one penny a share? It's what they made. So at what point do they pay a dividend? And I'm saying all companies, even if they're blue chip, they go to the bank, they borrow money to update their machinery on assembly lines or whatever. Companies are in debt.
Direct answer for you.
Yeah.
As soon as he pays off the lien that has the covenant that restricts him from paying a cash dividend, there is a debt held by someone that has a covenant that says he cannot pay a cash dividend.
Wow. I did not know that.
And paying a dividend right now would be the worst thing for AMC to do. I mean, the one thing I do agree with him is now he says it, but he didn't do it because he did stupid shit with cash. But he needs to be hoarding cash right now. to do the right things with. I mean, just look what Mark, I can't remember his last name, the CEO of Camping World just did. He's on a buying spree of buying independent dealership. And he cut his dividend in half, which I was the owner of the stock. I actually sold it all, and I actually tweeted me back. I'm going to go back in, but I knew he was going to take a hit because the dividend got cut in half. But he's getting cash because he doesn't want to take on too much debt to buy all these, all the different dealerships, like you said, locations. Yep. So, and dividends, I remember when we were in this deep, we're like, oh my gosh, we just got a dividend, it would blow shorts up. Well, there are stocks out there that are more shorted than AMC that pay dividends. Camping World was one. They're making profit, and it's shorted like 26%, 22%, and it was paying a 6% dividend. I mean, Zim did I can't remember how much the dividend was, like a 40%? I don't know. I'm saying too high. I think it was like a 20 or 30% dividend at one time, and it's heavily shorted, and the shorts just paid it. So it's kind of a myth that the dividend will drive shorts out. Especially at 1 penny. It just has to be at the right time and for the right reasons. Look at Apple. They pay like nothing in a dividend. They don't pay a freaking dividend. Google doesn't even pay a dividend.
And Apple has like $28 billion in a nest.
Yeah, they're hoarding cash for all the reasons they want.
And that's why I'm kind of invested in Apple.
Yeah. So I'm looking at it now that they took the little hit because they're going to be in trouble for a little bit till they get the new iPhone until the goggles start selling. But I like the dip right now. It's going nowhere. Microsoft's the animal. I live near the Bay Area and know a lot of people that work in high tech, and they all want to work at Microsoft. That's all. Everyone wants to go to Google, Apple, and everyone else to end up at Microsoft. That's the big daddy.
So I made a parody account today, just so y'all know, my side account that I had for a while, I actually turned it into a Bill Gates man boobs parody account. So if you see that floating around, that's me. So
you kind of sound like Bill Gates.
I can impersonate a lot of people, dude.
You're kind of pervy like him.
Yeah. Well, I'm got to go drink my soy milk and
driving around in your little car asking kids if they want candy.
Well, here's the good thing here. Meta just had a 1 minute candle at close for 1.11 million shares on the downside. So, okay, so back to macro, what we were talking about going cash heavy, T-Dog. We just had the U.S. credit rating get downgraded for the first time in a long time, if ever. And then they're now downgrading major banks. Then Upstart, which I've been following for a long time, takes a 20% hit after hours, which is a lending company. But consumer revolving credit usage is at an all-time high. They're dumping treasury bills. Japan sold a bunch. And we have shipping companies going out of business. Everything is getting ready for a major correction to the downside, which is why I think Meta is going to go 220 and then 150 or 30, whatever that gap is. But this is like a rolling market crash. That's what they set up with this. It's not going to be like 07 where everything just dumps in a flash crash. This is going to be a rolling market crash where we have pumps and exit liquidity. It's going to be pretty wild. So I'll tell everybody this. Like I said, I'm not an Adam Aaron fan. I think he's lazy. He's always late to the punch. He's a globalist. I'm not a big fan of it, but his plan will work if it converts and he raises meaningful cash above $35 a share. I'm talking $3 to $5 billion. He can pay off deferred rent. They can clear some of the high interest debt, which opens them up to paying a dividend if they get rid of said certain covenants. And it puts a lot of cash in the pocket to go through the next couple years into a more stable economy.
So when does he announce an annual earnings call?
What's up?
We missed the annual earnings call. It's usually like late May, early June.
Yeah. They'll announce it. They'll announce it after the judge makes his decision. I
was thinking that too. I really figured that maybe they would have announced it around this time right now, but nope.
Yep.
But how long can they go without having one?
Technically, they can go through the year. I think they normally have it this time or in June, and somebody is actually suing to get it done. But I guarantee you, they're just waiting on the judge's decision. They'll immediately announce it. And wouldn't it be funny if the judge approved the settlement and we converted on August 22nd, which was the day the dividend was issued originally last year? That would be kind of funny. So
I think what she wanted to see is she wanted to see the numbers that he wouldn't produce for her. She asked for the numbers.
Yeah.
Show me that you're going bankrupt, and he just showed it. He just showed everybody that we're making money.
Well,
Sure, we're burning through it, but in this quarter we made a little.
We
And
made
next
a
quarter,
little this quarter. I'm telling you, Q1 of 2024, though, you can't base it off of one quarter. You got to.
I
The
know.
judge is going to go back and look and see the past 7 quarters and go, damn, they're burning cash like crazy. And in Q1 is like always one of our worst quarters, right?
Actually, Q3 was usually a bad one too. But anyways.
Yeah, Q1's always really soft.
Yeah, it is.
Through Christmas and stuff. So
Q1 gets hit because Q4 is usually strong with Christmas movies, which I don't know if they're coming out this year. And then they pay for all the concession, all the net 30, net 60 bills call come due, and the Q1 movies are usually slow. So you got a slow revenue and high cost quarter.
Well, she has to.
Always happens.
She has to associate and incorporate too the cost of inflation. Energy costs are not going down. You have to have a consistent raise of rate and expenses, and with things the way they are right now, especially with the equity markets getting ready to get absolutely slammed after the downgrades into the new fiscal year for the government, it's not going to be good. So
hey, I was actually surprised, changing topic a tad, that they closed 16 theaters. That was actually, I thought, was a good thing. You only hear about the ones they buy, and I think he said they closed 16 theaters, and I was like, well, why don't you talk about that? I'd be more excited about that than them opening theaters right now.
Well, absolutely thank God that they did close those theaters, because we've been telling him for, I don't know, a year now. The couple theaters in Michigan and Holland and Saginaw, they're horrible. I mean, they cannot be making money. And I went to both of them. The Saginaw one's absolute trash, but they may be closing them as their leases are coming up. Because in said certain leases, you may actually get penalized for closing, for breaking the lease because you want to close the theater early. It might have been more beneficial for them to wait for these leases to expire. So
yeah, no, and you've got severance. I mean, it's not free to close the theater, but they just never talked about reducing the theater, because I think in general there's too many theaters. Yeah, I mean, the movie industry, people want to say it's back, but it's not going to ever be like it was. Streaming, home theaters. There's still a ton of people. I'm not in this camp, but a ton of people that don't like going out in public anymore. But there's still, still people wearing freaking masks. That affects the bottom line. And then the whole ways movies are being changed or built or made are changed. I mean, all the studios are getting killed. They're losing money. So it's just a different industry, and it's going to look different. I mean, my wife loves watching a bunch of different streaming series, and I can't tell sometimes if a series is a series or a movie because there's such good quality. It's kind of like, I kind of hope it's a series so I can watch more of it than just 2 hours. I mean, some of these series and the people they have on them are awesome.
Well, look at Bird Box and then Don't Look Up. Those both should have been in movie theaters. But that's a good point you made earlier about, dang, I lost it. What did you just say before the streaming thing?
The shutting the theaters, the 16.
There was something else he said that was important. I forgot. It was a really, really good point.
I thought it was the theater close. Most I talk about.
We did theater closing, and then in between you said something, and then you talked about streaming. I can't remember.
Oh, that the studios are losing money.
Yes,
they're changing the way they go into business.
That's it. Paramount, even with Top Gun, just came out and said they were having trouble.
Yeah, Disney lost almost $1 billion that last time they reported in their movies.
Yep. And what's going to happen?
They're getting ready to sell everything. They're getting ready to spin off a bunch of crap to try to get the bottom line better.
Just like Bud. What's going to happen is all these major companies knew this market was getting ready to take a serious crash. It got supported a few months back when Jamie Dimon decided to pimp everybody and say there's a short ban. So what they're going to do is they pumped exit liquidity, right? We're coming into an exit liquidity period right now where they're going to sell off a bunch of product. They're going to sell off a bunch of stuff. They're going to restructure their company. They're going to recapitalize their stocks. And the whole market, there's going to be just reverse split after reverse split. It's all coming. So, Adam Aaron doing this right now, he's actually, honestly, in my opinion, if we get this done before August, he literally beat everybody at the start line, which is going to be really good for even common stockholders. If you're $10, $20 a share, you still have a really high cost average post reverse split if you didn't average down or you didn't buy ape to play it properly. But if we pop $30 at open and it runs between, let's just say 72, because that's been done before. Let's say we go back to $72. That's a good day for everybody. Then retail can walk away from the play and he's going to have no guilt and no responsibility on him because he gave you an exit opportunity, even if you bought $30, $40 a share. So, or let's say $70 a share. So
yeah, I don't think their idea, it was sitting everything in the whole Project Popcorn. I don't think the idea is bad. I just don't like whose backs they're doing it on and how total conniving it was.
Yep.
That's the part I don't like about it. I'm not saying, like, I agree with you, Spence. It's actually, like, if you look at it from a conniving business, like I use my Axelrod because I love that show Billions, my Axelrod guy. It's like brilliant, but it's evil brilliant. That's what pisses me off about the whole thing is he just played everybody to milk every little bit out. And that's why the call today was just so disgusting. It was just still him being him, eating freaking candy. The things that we all tell him we hate, he does.
Yeah.
Just to throw in our face. He's
just
an ass. He's an ass hat.
He's a car salesman. He's a con man car salesman. And everybody knew it. We all knew he wasn't like a CEO that was elected by the board, by shareholders. He was an implanted CEO from big money from day one. But all the people who harassed Tara and me and everybody else, they were all worshiping Adam Aaron nonstop. I mean, that's where everything went wrong. Most of the shareholders worshiped him, and he said, okay, well, I mean, if I'm the shiny golden god, then I'm going to treat you like the peasants you are. And he did. So, if you woke up, good. If you didn't wake up, I'm sorry that you're still there. But like I said, I'm so stuck in between everybody because I'm playing this as it unfolds, which I know he's a con man, but I see what his method for doing this is, and there's real money to be made on it if you play it right.
That's exactly where I'm at, and like that's where like Ethan and like Ethan gets pissed because I'm like, dude, I'm not gonna hold AMC for a moral victory. I'm buying ape to make money because you can see where this play is going, and people bitch at me like, why are you still here? I'm like, I've been here for almost 3 years, and I have a lot of stocks, and because of what we've been through, I think I know more about this stock from a fundamental basis than any other stock that I'm invested in right now. So if I can squeeze money out of some kind of, any kind of way on a call, a put, buying AMC, whatever, I'm going to, because you can kind of see what's going to happen. And that's where we're all just kind of sitting around waiting for the judge to make her decision. That's all we're waiting for.
People saying they're holding AMC common stock for morality reasons are lying. There is no morality in money whatsoever.
I have a problem with that too. Yeah, well, I have a problem with that too because you're supporting a CEO who is not the best person. Like even when AMC writes itself as a ship, I don't see it being. It's not a big growth stock, right? Unless it pays a big dividend in the future, I don't want to own it as long as its current management is in play.
Right.
I really don't care what it does long term. And as soon as they leave, if it's fundamentally sound, I'd probably go back in. But if it writes its ship, writes itself with the dilution and gets to $3.5 to $5 billion and gets itself in line, I'm still not really interested because it's not, like I said, it's not a big growth industry. It's not it's not going to pay a huge dividend. There's better options out there. And I know a lot of people don't like Mark, but I know we all love Mark. He has the best saying, man, you bet on the jockey, not the horse.
Yep.
And right now our jockeys are criminals.
I'll tell you what, when this Mark, here we go. Random person ringing my doorbell. Hold on, I'll be back. You guys go ahead.
Hope it's not Stooky.
T-Dog, where are you from in the Bay Area?
NorCal. I grew up in Sunnyvale, though.
Yeah, I'm from Martinez.
Oh, okay, cool. Yeah, I was back in Sunnyvale. I went to a concert at Stanford this weekend.
Yeah, did you?
So if anyone's into Innovex, I drove by their facility on Sunday.
Oh, yes,
the parking lot was full of people working, and there's a ton of construction going on that corporate headquarters.
Good, because... Go on.
And I knew it was by... Tesla, I didn't realize it was smack dab in the middle from the factory and the corporate headquarters. So the factory is 1 mile one way and the corporate headquarters is a mile the other way. So they're right there by Tesla. So it's pretty, as a shareholder, it's pretty cool to just go check it out really quick.
Well, awesome. Thank you for telling me because I too am a shareholder. Thank you, Mark.
Yeah, and I mean, I know it's kind of taking a hit a little bit lately, but the fundamentals in that is, that's a growth opportunity. We have to watch as long as the tech keeps progressing the way it is. I'm very bullish, and what really made it bullish is just recently got the CFO from Micron, who left a pretty high-paying job to come to a startup company. That kind of shows the conviction he has.
I'm retired military, and I was with Naval Special Forces, and I can tell you, the shit that we were using, or they're using now, it's amazing shit, and it's all right there on your wrist, and that's and batteries are what power it, and that's just what Mark was saying a while ago. If the military contract picks us up in a contract form, it's a matter of time before companies like Apple or other companies start looking at these battery sources for their equipment.
Those batteries. Those batteries will end up in aviation quicker than anybody can blink, and then that's when they're going to make billions. So
okay, but
everywhere.
I know how the military operates. So they go for the lowest cost product that there is, and I'm not saying they're going to take a cheap battery, but something when you got lives on the line, you got a small team of people out in the hills. Those guys can get what they want. If they want top quality shit, they'll get it, and and that's how it goes.
Yeah, they're our batteries when we were deployed in Iraq, even in 2008, were garbage. We just got into the lithium batteries for most of our devices we were using.
Yeah.
But like the old SyncGars radio, those round batteries you got to replace those things are crap, man. Even the batteries in some of the transponders in the aviation field are round, which literally causes engineers to have to make the boxes, let's say, even an inch bigger than they need to be. Like Innovic's batteries with their designs, their flat design is brilliant for aviation applications. So
if the battery tech does pan out the way they're moving it, it's going to be bigger than the company. That's going to get. I think it was in the last conference call they talked about they'll have to license it out because the technology will be bigger than they can produce, which is a great place to be in.
I'm telling you, I'm waiting for this market dump, and I'm going to load. I hate to say this, but I think everything's coming back down. When this market dumps and my Meta puts, I finally cash those out. Let's say this: if Meta goes back to 220 before the end of August, which it very much well could, the way Upstart just moved. If it goes back to 220, my $500 put will just made me 30 grand that I'm going to play with for free. And when I see the market bottom out again, I'm going to load so much freaking Innovix and Overstock. I'm just going to walk away. I'm going to load it and I'm going to walk away. And the day Mark fires the cannon, I'm going to be like, all right, time to probably take some profit. So.
Yeah, remember on Overstock, he fired the cannon and it went down. It basically peaked when he fired the cannon. So keep that in mind when he fires off the cannon.
Yep.
Yeah, no, I'm just dollar cost averaging on those because I agree it's going to be choppy. So I'm just doing old school every week. I'm just buying 10 shares here, 20 there, and trying to get my share goal. I'm actually almost there, so I'm going to readjust my share goals. But I like it. I mean, there's nothing negative about it. I mean, Overstock keeps putting out press release after press release after press release since they got the BBY online site. That's pretty exciting.
Oh, absolutely. That's just the IP for BBBY. But check this out. Overstock gets the IP for BBBY, and people forget that they own like 50% of T0. What do you think they're going to do with all this logistics IP that they own with, the deals with Grain Chain and now Bed Bath & Beyond? They're getting ready to create Overstock into one of the it's going to compete with Amazon eventually is what's going to happen. It's going to take time, but it's going to be there.
Well, it should go by Wayfair because Wayfair's got financial issues, even though that stock's like $80, which is insane.
Yep.
But I mean, you've got, I don't know if we'll get to Amazon, but you've got Amazon, you've got Walmart, and then there's going to be someone like an Overstock that'll be number 3. So,
Absolutely.
Which is still huge. I can live with that. I'm totally buying it for $30 a share today. That's crazy.
Well, you guys just saw Mark's tweet about T0 partnering with that company for cash rounds.
I did not know.
Go to Mark's page. T0 is partnering with I forgot what they were called, but they're getting ready to do maybe some type of cash raise financing, if I'm not mistaken. Let me go to his page. It's really important because I got a lot of T0 right now just sitting there. So,
And I think Overstock owns 55% of T0, which is important because then that's the controlling.
oh, absolutely.
I think it's 55, if I remember correctly.
Here
But
it
yeah,
is.
no, I like those too.
Dealmaker Tech. We are excited to support our newest partner at T0 to the Dealmaker family. Together, we bring world-class technology to the equity crowd. So Dealmaker is like an equity crowdfunding platform. I'm wondering if they're tokenizing with T0, if that's going to be on the T0 platform now. So that's what, the third or fourth company that's signed up with T0 to tokenize this year. So that's a good deal, man. That's the floodgates are starting to open a little bit, and when one big company finally gets in with T0 and tokenizes, it's going to be a huge deal. So
I know. I'm hoping we get like Overstock will spin off. They'll spin off to its own company. We get shares of it out of our Overstock.
Yep.
That'd be awesome. I like those. I like those two stocks too. So I'm kind of surprised the judge hasn't done squat.
I would think after that you could probably think maybe Friday after hours again.
Yeah, the only reason I thought difference when he said, unless it's an excuse why they did the earnings this morning versus this evening, but it made it sound like he was nervous that the analysis was going to come out between this morning and this afternoon.
Well, it could come out tomorrow. Here's the thing, though, is that CJ Seats actually filed the last order on the docket for the AMC lawsuit, which was a denial of, let's see, David D. Madriz Jr. filed an, I learned this word finally, interlocutory appeal from a stockholder class action, where the appeal was filed incorrectly, basically. So this judge denied it. Let's see.
I saw that. I saw that.
Yeah, Seats, Chief Justice Trainer, and Legro justices. So that means that Zern wasn't involved in that one. So maybe she is on some type of vacation. But there's other people in place to do this. So
they are making sure they got everything absolutely correct.
Yep.
Before they come out with anything.
100%.
They're going to make sure, because they will be under the microscope so goddamn bad by 3.8 million people.
Yep. I totally agree. She's dotting the I's and crossing the T's and making sure that if Ape shareholders would have got included in the settlement and paid out with AMC shares, but they weren't represented in the settlement, then AMC shareholders common stock could come back and sue again. So she's doing her job. And personally, me, I own a ton of Ape. I would get a bunch of AMC shares if that was the case. I don't want them. I don't want any more dilution unless it's going to be bought on the market for over $30 a share. So
yeah,
good point.
Didn't AMC Bigums accuse her of being on the take by Citadel?
Oh God, a bunch of people did after. When they started harassing the court staff, and then.
Why would you ever slander a
judge?
I'm like, you guys are morons, man. They really screw you up.
They're on drugs, dude.
Well, I was just watching Rounders. Have you guys seen Rounders with Matt Damon?
Yeah.
He talks about the judges game, and one guy broke into it, and he couldn't even cross the street without getting slapped with a fine after he took over the judges.
Oh, dude, I love Billions too. I'll tell you right now, you need to go watch Suits.
I like Suits as well. I watch Suits. Yeah. Suits is good. Billions, it starts this Sunday's the new episode, and Axe is back. I kind of got turned off by the other guy. I love Axe. Axe is back.
I haven't gotten through all the seasons yet.
Well, if you haven't seen Axe leaving, then you're so far behind that you deserve a spoiler alert.
Well, see, this is how you ruin the industry, man. Now I don't even want to watch it. So.
Damn it, I just killed AMC. I just killed Netflix or whatever it's on. Is it on Netflix or is it on Amazon? I can't remember.
Amazon, I think. I can't remember. I just canceled 3 streaming services this week just to get back down to Hulu and Netflix. So
I was trying to get my wife. I think I pay $100 a month streaming. My wife won't let me get rid of any.
If somebody would create a service that combines them all into like a cobbled up thing of streaming services where you could watch whatever you want for one monthly payment, they could call it Cobblecord, and it would be the greatest streaming service on the planet.
Yeah, but they all have their hands in it. They don't want to share. I have Apple TV too, but that was mostly for Ted Lasso, so I'm not sure I'm going to keep my Apple TV.
Do you know what Cobblecord is?
I don't know what.
That's Gasparino's like
Like-
wife's business where you.
Oh, okay. Yeah.
Yeah.
I knew it sounded familiar. I can remember. I was like, okay, yeah.
It's a
When-
data harvesting app, basically, is all it is.
I know it sucks because that guy's like the biggest ass, but he's been right.
Yeah. Well, you know, there's short term right and there's long term right. Short term. See, here's the thing. He was very supportive of T0. He wanted that to happen. He had Mark on. That was a good idea. Multiple big companies were like, yes, this is a great idea. You should do it. And then it all fell apart because of the backdraft from all the retail shareholders and then Adam Aaron, probably his bondholders telling him not to do it because they were actually involved in really shady shit with naked shorts. That's why Adam Aaron said, I got to be really careful what I say about all the FTDs because he's got his overlord watching him from the background, man. So.
Yeah, well, and I was having a flashback now. I remember when Mark was talking to us, and I think it was back when we were not on Mark's side, way back when we were kind of getting pissed at Mark, even though he was right. We were wrongfully getting pissed at Mark. I remember him saying he thought we were crazy for picking a fight with someone like Gasparino. He would really be on our side if we wouldn't pick fights with him. I remember something to that extent from Mark. That was a long time ago.
That happens. I mean, everybody's had differences, and now I get along with people that hated me at the beginning of this, and more people are coming to my YouTube channel because they're leaving Bigum's channel and all these other guys who are constantly just manipulating their viewers. You know, I've been giving all my YouTube money away for right up until I got banned for talking about, hold on, I'm still streaming, so I got to say it. The company that rhymes with Schmeiser, because I don't want to get banned again. So
The phone with the frog. Hey, the frog commercial. Froggy's talks.
yeah, that's I got as soon as I started going against Schmeiser, the people who make the injected serums to potentially prevent illnesses. Man, they banned me for 3 months almost immediately. So I'm gonna behave on YouTube now. So.
So, hey, I've got to run. I'm actually late for a call. I actually do have a real job, so I got to run for a minute. But thanks for having me up, Spence. It's always fun. Hope everyone's doing okay. All you haters, I wish you would have came up and hated me, but whatever. I'll keep doing what I'm doing.
Cool,
Talk
man.
to you there, Spence.
Later, buddy. Yeah, and that's it for me too, guys. The whole time that we were listening to the call, I was cooking meatballs with homemade pasta sauce, so I'm gonna go eat. You guys, I really appreciate everybody coming in. You know, please share the call even after it's closed so people can go back through and listen to what we talked about because there was really good commentary in here today. And always thanks to Sugar and PJ and Elo for supporting me. Jack always support me. Chris, T-Dog, Red Diver, always great to have you up, man. So I'm gonna go ahead and shut her down. I hope everybody has a good night.
All right, hey, peace.
Later, buddy. All right, man, I really just am going to apologize again to everybody about the stream earlier. For some reason now I had to do something different with X. The space call wasn't streaming off my desktop into the sound unless it was like duplicating. So I fixed it. I'm back. Sorry. Like I said, I haven't been streaming live except for the past 3 days and like 3 months because I got banned. But I'm back. I'm going to fix it. I'm going to work this week and this weekend to really try to upgrade the quality of the stream so we don't have any more issues like that. But I really appreciate you guys. Please like, sub. The comments were amazing. The questions were great, and the commentary is always appreciated. You guys have a great night. Froggy